Good morning, money magnets and master traders. How are you guys doing today? It is Sunday morning and we got another week coming up. Thank you, Lord, for all the money me and my fellow sheep style traders are about to make this week. It's going to be crazy. It's going to be amazing. It's going to be miraculous. It's going to be spectacular. And I thank you guys all for being here with me, to exist with me in this reality where we get to witness this incredible price action that we have been having lately. Guys, whether you like Donald Trump or you love Donald Trump, you got to admit that guy is controversial. The market is emotional. He's got everybody emotional. And I'm going to capitalize on it. As heartless as it sounds, guys, we got to be focused. We got to keep our eyes on the prize. All this other stuff is distraction. Okay, it's distraction. If your goal is to be a master trader, and a lot of you are, we got to focus on what really matters. And that is the price action. Okay? Now, ever since we had that false breakout setup, okay, we had this incredible move to the downside and we've made so much money. I hope you guys caught a piece of the pie. We've made so much money starting with that false breakout, breaking down that triangle structure, breaking down the 50 daily moving average. And now we hit that 200 daily moving average. We are getting some buying pressure. A lot of different things happen on the way down, but you want to know something that stayed constant? Something that stayed constant is the fact that while SPY was dropping to the downside, about 80 to 90% of the time, very close to 99% of the time, it stayed below the 5 daily moving average. Multiple times it rejected from the 5 daily moving average. Okay? So I'm looking at SPY right now. Yes, we got some buying pressure from the 200 daily moving average, right? But did it clear the 5 daily moving average? No, it did not. And when SPY is below the 5 daily moving average, what does it like to do more of? It likes to drop more. It likes to break down support more. Okay? So Uncle Chartist is the bottom end. I mean, we hit the 200 daily moving average. Yeah, I mean, it's definitely a good spot to buy the dip. But for Uncle Chartist to favor more upside, right? Recapturing that 575 level was a good start. But we've seen lots of evidence that when the market is bullish, it spends more time above the 5 daily moving average. And when it's bearish, it spends more times below. And it's still below. So getting above the 575 level is a good start. Getting some buying pressure from the 200 daily moving average is a good start. But if you want more bullish follow through, if you are a bull and you want more bullish follow through, you want to see that 577 and 578.5 level clear. Why? Because those are the next resistant level, and the 5 daily moving average is around that 578.5 level. So getting above that level could be a good start for the bulls to recapture and getting back above the 5 daily moving average. Because when the market is bullish, like I said, it spends more time above that moving average. So to be bullish, the market has to do bullish things. And one of those things is getting and trading above that moving average. So am I bullish just yet? No, I'm not bullish just yet. I need to see more evidence. Will I trade the bullishness or the bounces, the little bounces? Of course. Okay, we had this beautiful setup. I used the 15-minute chart. All these setups were alerted in the group. We had a situation where we broke down 568 level. It was a beautiful move to the downside. We traded that as well. But then look, it recaptured 568 and it recaptured 570. These are levels I gave you guys in the last video. It was a beautiful move to the upside. So if we do get bounces, of course, I'm going to trade it unbiasedly to the upside, level to level style. But if we're talking on the daily chart, If we're talking on the daily chart, guys, swing tradable move, Uncle, are we bullish? My answer is not yet. It got to get above that 5 daily moving average to put those higher targets in play. The bulls have a lot of work to do. Getting above the 5 would be a good continuation, but we're still below the 50 daily moving average. We still have this downtrend as well with lower lows and lower highs. The bulls have a lot of work to do, and we still have a lot of uncertainty in the market, okay? Now, I'm sounding very bearish right now, but trust me, Uncle is a sheep. And the only reason why I'm sounding bearish right now is because that's what the charts are showing Uncle. Okay? That's all it is. So, recapturing 575, good start. But for bullish follow through 577 and 578.5, must clear next to get above that 5 daily moving average. And we can likely go test the next fib level, which is around 583.5, 583.5. I have one at 5, all in one 590. I updated my fib levels, guys. I started from January 13th low to February 19th high. Okay, so I updated the fib level, so we're getting some new levels here. But overall, those are the levels that must clear if we want to get a bounce going. Are we on the same page here? If is the big word. We want to react to it. Because there's no guarantee we're going to get that bounce. And like I said, below the 5 daily moving average is still overall bearish. And if bears want to show follow through and give us the trigger to enter puts or give us the sign to keep holding our puts, staying below that 578.5 level was a good start. We bounced a little bit and it defends good for the bears. But what bears really want to see is a false breakout setup, because we lost that 575 level last Thursday. We recaptured it the very next day on a Friday. So if you're a bear, you want to see 575 break back down to give us that false breakout setup. And then the 200 daily moving average is around 571.6-ish. We want to break that down. And then we had a tough sell zone, buy zone around 570 and 566.4. All that area must break down to give us more downside. And I tell you, if we lose the 200 daily moving average, that's extremely bearish. Extremely bearish. All right, so we are the favor of bounce. Stay above 575, recapture and clear the 5 daily moving average to give us a more upside, to make it a possibility. And if it is, if the plans to be more, to drop some more, break down 575, break down that 200 daily moving average. And that's your sign to either enter puts or continue to hold on to your puts. Triple Q, similar situation where it did not clear the 5 daily moving average. Now, we did lose a fib level, that 490 fib level. We recaptured it Friday. That is a false breakdown setup, okay? If there's bullish follow through, getting above the 5 daily moving average would be your sign. Staying above 490, clearing the next levels at 492, 493.5, and 495. That's around where the 5 daily moving average is. Getting above 495 would be a good sign. We are going to bounce some more up to 498, 499.7 or higher. A recapture of 499.7 would be a massive win for the bulls, okay? That's if we recapture those levels. But if you're a bear, you notice we recaptured that 490 level. That's where the last false breakdown setup was. So if you're a bear, you want to see that trap setup right there get invalidated. You want to see 490 break back down to invalidate the false breakdown. If it gets invalidated, there's no reason to be bullish. All right, short term. I'm talking short term, guys. And here is Tesla, very far below that 5 daily moving average. A lot of time when it gets too overextended far from the 5 daily moving average, it tends to get a bounce to try to get a little close or a back test of it. But overall, Tesla's still bearish. Got to be careful. It could be like a little wedge developing here. And if that is the case, we need to see levels recapture. Stay above 262, clear 265 and 266.5. There was a tough sell zone there. But if we can clear that level, we can get a bounce to 270, 272, 273.6. Getting above 273.6, that's a recapture of a fib level. but also will send us above the 5 daily moving average, which could be a sign of a bigger relief rally. Just a relief rally, because this ticker symbol is super bearish. If there is no relief rally and more downside is the plan, staying below 262 would help, because that is a fib level. And breaking down 260 and breaking down the next fib level at 258.5 would send Tesla lower down to 257, 255, possibly all the way down to 250 area again. Okay, there was tough buying pressure there, but we could break down those levels. We can retest those bottom lower levels. Here is NVDA, did not clear the 5 daily moving average as well, so can't fully get bullish. Can't fully commit to a bigger bounce unless it can recapture 114 and get above that 5 daily moving average. Okay, kill two birds with one stone. Clear and recapture a fib level and get back above a moving average. And that will put 116, 117.5, and 120 plus back in play. If that level clears, guys, that's your sign that we're going to pop up higher. Now, if we drop back below 112 and 110, that's your sign that we are dropping down lower and the bearishness continues. Remember, below 114 is bearish, and above, a possible bounce can happen. IWM, well, it actually retested the 5 daily moving average, and it found buying pressure, as you guys can see right there on Friday. Okay, as of right now, 205.6 is a fib level support. If that level fails, I would trust a rejection more from the 5 daily moving average. That will send us down to 203.6, 202, 200.8, 199, and 197.2-ish. All in play. I would definitely trust that rejection from the 5 daily moving average when we break down more support levels. But if we are to bounce and we clear 207.5, that would be a recapture of the 5 daily moving average, putting the fib level of 210 in play first. And above 210 would be 212 and 214 plus, all back in play. Apple managed to recapture the 237.2 fib level, but it ran into the 50 daily moving average as well as the 20 daily moving average. To clear both those moving average, Apple needs to get above 240 to put the higher targets in play, possibly back up to 243 and 247 plus. But if these moving average truly defends, I would trust the rejection only if Apple drops back below 237.2 and 237. And that should send Apple back down to the 200 daily moving average. Here is Amazon. It's messing around at the 200 daily moving average, guys. Not seeing, much buying pressure just yet. I mean, intraday, yes. But on the daily chart, on the bigger time frame, not much. Still overall bearish, as you guys can see. And it is below the 5 daily moving average. So to get a bounce going, Amazon needs to clear 203. That is a fib level, and that's also the 5 daily moving average. So 201.5 and then 203 must clear to put 206, 210 or higher in play. Above 210, we can possibly clear this downtrend line, all right? If we are to be bearish, must stay below 203 on any bounce. Breaking down 200 and 198 would allow Amazon to get below the 200 daily moving average to put 195.5 or lower in play. That would be very bearish if we lose a 200 daily moving average. Now here is Microsoft. It's flirting around the 5 daily moving average, but it's overall bearish, still below the 200 and the 50. In the short term, though, I have resistance at 395 and 396.4. If those levels can clear, then we could possibly get a bounce up to 400 and 401.8. All right, we get a bigger bounce above 401.8. All right, failure to clear those resistance levels, I do have support at 393 and 391.8. Those levels fail 390, 387-ish or lower incoming. All right, still overall bearish unless Microsoft can give us a recapture of that 401.8 fib level and get above 410.7. Holy moly, donut shop. Here is Meta. Been looking pretty bearish lately. We did get an end of day bounce on Friday. Let's see if it can continue into the next day. I do have a fib level, support level at 623.6. If it fails to give us a bigger relief bounce and we dropping back down, well, 622, 620 or lower is incoming. This is a very volatile stock. I love Meta. Could possibly drop a lot lower than that, okay? I do have a target around 609.5 and 608. All right, so if we are to get a bounce, though, I would like to see 625 and 627 clear to put 630, 633, and 634.6 in play. We have some strong selling pressure from that 634.7 area, so a recapture of that level would definitely be a big win for the Bulls. But if they fail to do that and they break down support 623.6, we are heading back to the downside. And this DXY, I had to zoom out for this one, looking very, very bearish. I had this big triangle structure. You didn't really see it because I was usually zoomed in on DXY, but we zooming out today. And the reason is I just wanted you guys to see this false breakout setup, on this triangle pattern. We broke it out. It was a nice breakout. Back tested it as a support. You see a resistant level turn into a support. That's how you know the breakout was legit. And it was legit. It sent DXY to higher highs. But since then, we had that pullback. And the pullback led to a nice sell-off. And now we have a big false breakout setup here. Look at that head and shoulder pattern you guys can see here when we zoomed out. Looking like a Christmas tree. It's got to form the other side of the Christmas tree. But, I mean, if DXY does want to form the right side of the Christmas tree, I have next support at 103.1. That's a more macro level fib level. Oh, I got the arrow there. It's a more macro level fib level. Goodness, the arrows. Let me move the arrow. Sorry about that. Yeah, see, you guys see my yellow fib levels? It's a more macro level. So 103.1 is the critical macro level fib level that I have. And if it fails, guys, 102 or lower incoming, possibly could drop back below 100. That would be crazy. But as of right now, resistance is at 105. A recapture of 105 would send DXY back, a break back out of this triangle structure. So that would help out the bulls if you're a bull on the dollar right now. Okay, so got to get above 105 to turn things around. Otherwise, if we lose 103.1, more downside incoming. Here it's coin. I got a little diamond pattern here. We'll see if it's a reversal or a continuation to the downside. It's been chopping lately. If it's bullish, guys, I need to see 219, 221, 223, and 224.5 clear. Please write those levels down, all right? 219, 221, 223, and 224.5 clear. If they do, we are bullish on coin, more upside incoming, possibly back up to the 240 area, 230, 240 area. If we are to be bearish, 216 and 214 must fail. To break down this little structure that I have here, 212 and 210.5 must fail as well. Below 210.5 would be the breakdown and send us down to 205 or lower. It would be very bearish for coin if 210.5 is lost. Here is the VIX. Now, while a lot of the other ticker symbols was retesting the 5 daily moving average as a resistant, VIX tend to inverse the SPY. It's been going up. Volatility is here, guys, and I hope it stays for a while, a long, long while. But look at here. It back tested the 5 daily moving average as a support. Okay? As long as above that 5 daily moving average, that's still overall bullish for the VIX. Okay? And the moving average is around 23.2-ish. And I also have a support level at 22.5. That's a fib level. And it's also based on this uptrend line, blue uptrend line. So 23.2 and 22.5 are the support levels that I have for VIX. If both those levels fail, then maybe the VIX will drop back down to the downside. Okay, and we get a much bigger move to the downside. But overall, if those levels can hold, the VIX is still overall bullish. We could get some chop. But if those levels hold, that would be the VIX setting up for some higher levels. And I have resistance at 24.3, 25.5, 26.4, 27.3, and 28.6. All right, those would be my targets to the upside for the VIX. All right, guys, thank you guys so much for listening and watching Uncle's video. Please hit the like button and subscribe if you didn't. This means a lot. You guys are money magnets. Don't let anybody tell you different. Be grateful for advance for all the success you guys are getting, are about to get. Be grateful in advance and just believe in yourself. All right. Thank you guys. Peace.